What insights can we glean from one of the world's most successful investors about money, life, and happiness? Let's dive into Warren Buffett's candid conversation about the current economic landscape, the secrets to his success, and his advice for living a fulfilling life. Buffett began by addressing the hot topic on everyone's mind. He confirmed that substantial inflation is indeed occurring. But what exactly does this mean, and how is it affecting the economy? Buffett painted a picture of an economy that's red hot, with prices rising across various industries. From steel costs to housing prices, the impact is widespread. He noted that steel costs were increasing daily. This trend isn't limited to raw materials, it's affecting consumer goods as well. Buffett mentioned that in his furniture stores, people can't stop buying things, and the stores can't deliver them fast enough. What's driving this inflationary trend? According to Buffett, it's a perfect storm of factors. First, there's the government's financial policies. The stimulus payments have put more money in people's pockets, which has led to increased spending. Buffett observed that people have money in their pockets and are willing to pay higher prices. At the same time, supply chain disruptions have created shortages in various sectors. This combination of increased demand and limited supply has resulted in what Buffett called a buying frenzy in many areas of the economy. He observed that it's not a price-sensitive economy at the moment. But how long can this trend continue? And what does it mean for the average person? Buffett didn't claim to have all the answers, but he did offer some historical perspective. He reminded us that since his birth, the value of the dollar has declined by 94%. He warned that inflation is a very cruel tax on people who believe in fixed dollars. So in this inflationary environment, what can people do to protect their wealth? Buffett's advice might surprise some. Instead of focusing solely on investments, he suggested investing in oneself. He argued that the best protection against inflation is one's own earning power. But what does this mean in practical terms? Buffett explained that by continually improving one's skills and knowledge, a person increases their value in the marketplace, regardless of what happens to the currency. He said that if someone is the best in their profession, whether a teacher, surgeon, or lawyer, they will command a given part of other people's production of goods and services, no matter what the currency is. This advice ties into one of Buffett's core beliefs, the importance of continuous learning and self-improvement. He encouraged people to look for jobs they would take if they didn't need a job. The passion for what one does, combined with a commitment to excellence, can lead to both financial success and personal fulfillment. But what about more traditional investment strategies? How does Buffett approach investing in an inflationary environment? He suggested looking for businesses with strong earning power that don't require heavy capital investment. Buffett cited companies like Coca-Cola as examples of businesses that can maintain their value even in inflationary times. He explained that if one owns the Coca-Cola trademark company, they will get a given portion of people's labor 20 years from now and 50 years from now for their product, and it doesn't make any difference what's happened to the price level generally. This focus on enduring value is a hallmark of Buffett's investment philosophy. But Buffett's wisdom extends far beyond financial matters. He offered insights into personal success and happiness that are equally valuable. What's the key to a fulfilling life? According to Buffett, it's about cultivating meaningful relationships. He stated that if a person gets to be 65 or 70 and later, and the people they want to have love them actually do love them, they're a success. This perspective ties into Buffett's broader philosophy on life and success. He emphasized the importance of integrity, continuous learning, and finding work that one loves. He advised that people really want to be doing what they love doing, encouraging them to seek out jobs they would take even if they didn't need the money. Buffett also shared some cautionary tales, including the story of long-term capital management, a hedge fund that collapsed despite being run by some of the brightest minds in finance. What went wrong? According to Buffett, it was a case of smart people doing dumb things by risking what they had and needed for something they didn't have and didn't need. This led to Buffett's most important pieces of advice: know your circle of competence. He stressed the importance of understanding one's own limitations and sticking to areas where one has genuine expertise. He said that defining one's circle of competence is about the most important aspect of investing. It's not about how large the circle is, as one doesn't have to be an expert on everything, but knowing where the perimeter of that circle of what one knows and one doesn't know and staying inside of it is all important. Buffett illustrated this concept with a personal anecdote. When looking at internet businesses or tech companies, he admitted that while he finds them marvelous and enjoys playing around on the computer, he doesn't know who's going to win. And unless he knows who's going to win, he's not interested in investing. This self-awareness and discipline have been key to Buffett's long-term success. But how does one develop this kind of self-awareness and discipline? Buffett suggested that it's a combination of experience, continuous learning, and honest self-reflection. He encouraged people to assign themselves the right story. In other words, to focus on understanding businesses and industries that align with their knowledge and expertise. Buffett's approach to decision-making is equally insightful. He used a powerful analogy to illustrate the importance of risk assessment. He asked listeners to imagine being handed a gun with 1,000 or 1,000,000 chambers with a bullet in one chamber, and being asked how much they would want to get paid to put it into their temple and pull it once. Buffett said he wouldn't pull it, no matter the sum offered, because it doesn't do anything for him on the upside, and he thinks the downside is fairly clear. So how can we apply Buffett's wisdom to our lives and careers? One key takeaway is the importance of continuous self-improvement. Buffett advised that the most important investment one can make is on oneself. This includes developing skills like public speaking, which he considers an asset that will last 50 or 60 years. But it's not just about technical skills. Buffett also emphasized the importance of developing human skills, the ability to work well with others and bring out the best in people. He noted that if one gets the best out of people around them, that's a rare talent, and it doesn't correlate with IQ. It correlates with an attitude toward the world and toward other people. This focus on interpersonal skills ties into Buffett's broader view of success. He believes that true success is not measured by wealth alone, but by the quality of one's relationships and the impact one has on others. He said he's never seen anybody at that age who has a lot of people that love them who aren't happy. Buffett's perspective on wealth is particularly interesting given his own immense fortune. He sees money as a means to an end, not an end in itself. He cautioned against the pursuit of wealth at the expense of more important things, saying that if one risks something that is important to them for something that is unimportant to them, it just does not make any sense. This philosophy is reflected in Buffett's own lifestyle choices. Despite being one of the wealthiest people in the world, he is known for his economical habits and modest lifestyle. He still lives in the same house he bought in 1958 and drives his own car. This alignment between his values and his actions is part of what makes Buffett such a compelling figure. But what about the challenges facing the economy today? How does Buffett view the current situation, and what advice does he have for navigating these uncertain times? Buffett acknowledged the unprecedented nature of the current economic landscape. He noted that we've never really seen what shoveling money in on the basis that we're doing it on a fiscal basis while following a monetary policy of something close to zero interest rates, and it is enormously pleasant. However, he also cautioned that in economics, one can never just do one thing. One always has to consider, and then what? So what specific advice does Buffett have for investors in this environment? He suggested focusing on businesses with strong fundamentals and the ability to withstand economic fluctuations. He pointed out to companies like Apple and Google as examples of businesses with incredible earning power and low capital requirements. But Buffett also reminded us that successful investing isn't just about picking the right stocks, it's about having the right mindset and approach. He emphasized the importance of patience, discipline, and the ability to think independently. He said he has to have an environment and a temperament personally that lets him think for himself. But how does one develop this kind of long-term perspective in a world that often seems focused on instant gratification? Buffett suggested that it's about cultivating patience and discipline. He often talks about the importance of delayed gratification, noting that the ability to resist short-term temptations for long-term gain is a key factor in success. What will your legacy be? Take Warren Buffett's wisdom to heart. Invest in yourself, cultivate meaningful relationships, and make decisions aligned with your values. Start planting your trees of success today. Like, share, and comment with your thoughts on Buffett's advice.